Good morning. It's Thursday, August 21st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So the dip buyers, they did lift stocks off their lows yesterday, but the market's really still looking for direction. And part of that direction could come today with the help of PMIs, housing data, and also Walmart earnings. And despite the pullback this week, the VIX bouncing up to about 1833 here on the futures contracts. Remember, there's a mini, a micro, and a large futures contract on the volatility index, but despite that bounce and that sell-off here, really the volatility index, if you look at it since those April highs here, bouncing to lower highs and lower lows on the charts. Hasn't hit any alarm bells. We haven't gotten over to the 2021 level on that volatility index. So it still looks like the investable bucket and the dip buyers will continue to emerge here on the US equity markets. Now, Goldman Sachs does say that it's time to buy the dip and momentum stocks, and the FOMC minutes, well, they flagged yesterday that inflation is still the major issue for the Fed on whether or not they can continue to cut rates or start cutting rates here. Because if you look at the September 17th probability here from the CME's Fed Watch tool, sits at about a 79.2% chance that the Fed will cut rates 25 basis points and a 20% chance that the Fed leaves rates unchanged. So that probability really slipping here, and the market is more on the fence as far as will the Fed cut rates or leave rates unchanged here. So Jackson Hole, that's going to get going here later today, but the main action that traders will be focused on will be Jerome Powell's speech here on Friday. I'll also be traveling tomorrow, but I'll be in regular contact here with all my traders here in updating and looking at these markets here, because it's a really dynamic situation that we have going on in a lot of these markets. And if you look across multi-duration time frames, your strongest markets, and if you haven't done so, pull up a chart of the feeder cattle market and the live cattle. These things have been parabolic here, not only for months and weeks, but also for years. And your weakest market out here, well, it's natural gas, because we get into this time here in August, in September, where we see some of the cooler action here in the weather allows natural gas suppliers to continue to build some of those inventories. But we'll be looking for a seasonal low for some kind of possibility to play out in January and February for any kind of seasonal snap here. So the economy, you're going to get the Philly Fed outlook coming out at 7:30 Central Time, followed by some manufacturing services PMI. You'll also have leading economic indicators, existing home sales, and then you'll have one Fed chairman here. He's going to speak here, Fed Chairman Bostic. He'll come out here. So markets at a glance, you'll get the 10-year Treasury yield edging just a little bit higher. Not enough, though, to justify the sell-off we're seeing, down about 0.5% in the gold market at 33.71. So really pushing below that first level of support, 33.76, and eyeing that second level of support on the gold market right around that 33.60 level. Now you get to the silver market. Nice snapback in silver yesterday. A lot of dip buyers on the retail side with that massive flow into the ETFs. I also see the futures traders really coming into that market as well. So silver futures giving back about 0.5%, down about 20 cents here at 37.53 here last. In the December contract right at 38. You have copper futures under a bit of pressure. Then you get into platinum, palladium, and aluminum all under significant pressure here. So you go to the volatility index, get unchanged here. U.S. equities pushing up a bit here. Bitcoin, Ethereum just selling off a touch here. And then you get over into the currency markets. You do have the dollar index just ever so slightly stronger here. British pound just slightly stronger. And you get the euro currency a little bit weaker. So kind of a mixed picture, but everything floating right around unchanged. Seems to be specifically the metals markets that are getting hit in the overnight market. So WTI crude oil rising for the second day. We saw some unusually large drawdowns on the inventories here, an unusually low U.S. stockpile. So volumes of crude oil held in storage tanks, well, across the U.S., they fell about 6 million barrels here last week. And then you also see gasoline stockpiles are also declining. So perhaps some kind of burn off here as a lot of these refiners are really assessing what the situation is between Ukraine and Russia, because that would anticipate to bring additional supply on the table. So you go back to the gold market. Well, you look at Fitch Solutions, the BMI unit. They said that prices will remain elevated in the coming weeks due to the market bracing for those September Fed interest rate cuts, but I really believe that's baked in the cake. Their range here is about 3,200 to 3,600 for the rest of 2025. Your key level support really that 33.70, 33.20 below that. You don't really want to see that market break below because that's where that 3,200 comes into the cards. So you look at the Mag 7, well, a little bit higher here on the pre-market trading with the S&P 500 sitting right around that 6404 level, and that's been a key level of support, and also yesterday's low, a key level of support, and that's where the dip buyers really came into that market. Where is that flip line where traders really start to short the market here? Well, I think that's kind of coming up in the next couple of weeks here. So when you get around September 2nd, right around Labor Day, that's typically when the market reaches its seasonal high on a thrusting basis. And then what happens is we chop for most of September here as dip buyers emerge, trying to front run that year-end rally that we typically see historically. So you go to European trading here. Well, those stocks were muted after 3 days of gains. You did have the Eurozone business activity hit a 15-month high, but the focus really is on Jackson Hole and any kind of data that we can get out from there. You go over to Asian trading. Well, the region's equity benchmark here, it slipped as technology stocks in Taiwan, South Korea, they were offset by those losses here in the Japanese market. So you get the MSCI, the Asian Pacific Index, just dropping a slight bit. You look at the ETFs here on the metals markets, you get some sells in gold, silver, you got some buys in platinum. So the exchange traded funds, well, they cut about 38,000 troy ounces of gold holdings in the previous session. So you look at gold still up about 11%, that change year to date. No real action there, a lot of complacency in the gold market. Remember, gold does serve as a placeholder in people's trading and investing accounts here, and really you look at the diversification aspect for the gold market, that's where it really shines through. So gold up about 28% here this year, and one of the best performing commodities, beating out most asset classes, US equities, Bitcoin, all other currencies out there. Gold is your shining star here. You look at the silver market, what's interesting about silver is that the ETF flows are up 12% on the year to date here, and really the dip buyers emerging in that market. However, they did cut about 463,000 ounces of their holdings here yesterday. So we'll see what happens. We do have the gold silver ratio sitting at about 89-1, and they're really laying into that gold market here today. So I'm gonna have to wrap this up and start looking at that gold market, start helping out some of the traders we have positioned in these particular markets. So if you got any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, well, it does involve risk of loss, may not be suitable to all investors. Good luck and good trading.